Hello everybody. So this video is entitled MSTR buys more, but the markets fall, because the markets have been falling for anything that makes sense, anything growth. The markets have been falling for now, almost 5 months, nearly 5 months. So today was supposed to be a party. We were supposed to have a great buy celebrating the 100th buy from Saylor. I guess he didn't do any big buy, and that's not really a symbolic number. He just did your run-of-the-mill standard buy. He acquired 39 million worth of Bitcoin with 39 million worth of ATM. It makes sense for Saylor to use the ATM right now because the MNAV is 1.2. We're selling $1 for $1.20. I like to see that. But of course, I understand why he's not ATMing too much, because it's the markets have been rough, the markets have been tough. Hence the title of this video: markets fall, growth stocks fall. This is what's happening. Anyways, we're slightly overperforming at MSTR. We're only down 4%, while IBIT is down 3.3%. And of course, Bitcoin is trading at 65,000. Bitcoin is trading at the lower end of the range, unfortunately. And this is because there are issues under the hood on this market. I haven't bought stocks in months now. I mean, very, very little here and there, but I haven't added to my portfolio at all, just building cash, because I don't trust this market. This market makes absolutely no sense. It has nothing to do with the fundamentals of MSTR. The Bitcoin price right now has nothing to do with the fundamentals of Bitcoin. It has everything to do with liquidity under the hood issues. It has everything to do with TradFi having a moment right now. All growth is being dismissed. It is to the point that, look at a company like Walmart versus Amazon. To me, it's so obvious that Amazon is going to beat Walmart. Amazon is going to take over Walmart. It's so obvious to me. They're getting into grocery. Listen to the last conference call. Grocery is the next big deal. It's their final play. It's so obvious to me. Amazon owns 30% of Anthropic. It's so obvious, yet the stock is way down. And you have a stock like Walmart, who's way up. The old world is being celebrated right now. Wall Street is winning, just beating up the old world. It makes absolutely no sense. If you look at old world stocks like Verizon or AT&T, for example, which in my view are entirely going to be disrupted by satellite broadband, satellite internet, satellite telecommunications, satellite cellular connection are coming, and it's within 18 months to 24 months. So what's going to be left of these businesses? I have no idea, but the market is only looking the next 10 days. It's entirely ridiculous, and Wall Street is crazy. I don't understand it. I absolutely don't understand why these old worlds are being bid. To me, this is perhaps an artifact of the S&P 500. But if you look at super innovative companies, they're all down. So how can we hope stretch to reach back 100 when there's liquidity under the hood issues on the market? If I look, I'm just showing you 4 totally disparate stocks here to show you the madness of this. So we have Klarna, for example. Klarna, buy now, pay later, disruptor of credit card among a handful of other companies. Down 72%. I analyzed this company yesterday. To me, this company is firing on all cylinders. It makes absolutely no sense. HIMS, of course, darling of the channel, down 70%. Tonight is a big day for him, so I'll be covering it, of course. Duolingo, language learning app, which the market has convinced itself that this used to be a market darling, by the way. It's not a market darling anymore. The market has convinced itself that the growth is not real, even though the CEO has confirmed on the call quarter-over-quarter that the growth is there. Down 72%, actually down more if you go from the peak. It's down more than 80% if you go. It reached 500, from 500 to 100. Again, absolutely ridiculous. Different sector. These are all super high growth companies. They're just being down 70%. And then I'm just showing you this time a blue chip in SaaS, an actual blue chip, ServiceNow. ServiceNow from its peak is down 51%. So you see, it's par. Everything growth is way down. It's par for the course. It is the market. That's the issue. The issue is the market. The issue is not strategy. The issue is not stretch. The issue is the market. The market is loving companies with a bunch of debt that are going to be disrupted by satellite internet right now. That's literally what the market is bidding up. Or Walmart that's going to be disrupted by Amazon. So it makes absolutely no sense to me, this love for the old world. And of course, I would tell you, if the market was reacting normally to things like good earnings, I would tell you it's time to accumulate. At this point, I don't know, because I see companies having great earnings all the time, and it doesn't really matter if you have a great earnings or not. The market's going to dump you. Case in point was AMD earnings and PayPal's earnings. AMD's earnings were stellar. PayPal's earnings were absolutely awful. Like, the company is accelerating, running into a wall. The PayPal CEO got fired. What do you think there was a difference in the market reaction? No, both stocks were down equally 20%. So you could have the most stellar or the least stellar earnings reports, and the market seems to be selling you off. The market has stopped following logic, and we're entering month 5 of the market stopping to follow logic. So I wouldn't be too upset about strategy. In fact, the performance of strategy, we were at 300, 400, we're now at 125. In fact, that's better than Duolingo. That's better than HIMS. It's a little worse than ServiceNow, I suppose. That's better than Klarna, definitely. So I wouldn't be mad at strategy, right? I'd be mad at the market if I had to be mad at something. Anyways, this was not financial advice. This is not investment advice. This is only entertainment. I'm hoping you were entertained. Please please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.